free market capitalism is so hard. You think it's easy, you set it up and it works. No, you have to constantly police the system because everybody loves free market capitalism, but everybody in their own realm wants to cheat and get ahead, damn it. And they do. That's human nature. They can cut a corner or cheat and have something better for their neighborhood or their family or their company. A lot of people will do it. People have to trust the system and they have to elect people that are going to fight for that system. And we got tons of stuff that needs to be cleaned up. Well, when you're in a boom and a bubble and everybody's growing and everybody's happy, nobody looks at all this stuff. Of course, these Madoff type of schemes are much more likely to happen in booming times, roaring 20s like times, than in a recession where everybody's having to get real and then look at everything and stuff. When I'd walk into these companies, I'm just looking at, you guys realize how much you spend on this and that and that and have been doing it for years? They're clueless. So the obvious becomes obvious when reality hits. And that's why we have to have reality. That's why we can't have an economy that's just trained to grow very gentlemanly, like 3% a year with 1 to 2% inflation, and either having super soft landing recessions or no recession. That's a fairy tale model. It's not a model that's even good for the economy long term. And that's the problem. There's no leadership. Everybody in politics, you get elected for 4 years. So of course, everybody always wants to make the economy look better now if you're in office and have any control. Now, I still say they don't control anywhere near as much of the economy as people think, but politicians will do what it takes to look good for the next election. Of course, we're coming in one now, okay? And the economy is going to be good. If the economy were bad, Biden wouldn't have a chance if he stayed in, and Harris wouldn't have a chance, okay? So that all has its impacts, but you still have to know that the system has to stay free. You can't react to it by keep regulating too many more and more things. You regulate obvious things. You regulate things that are interfering with competition where people are price fixing. And that's easy to see if you really look at it. So that's why you have to have certain regulations. It's not regulations to add bureaucracy to business and paperwork and stuff. It's interventions to break up things that are compromising competition for special interests. If I was president of the United States or head of the system, no lobbying. Period. Okay? If Congress needs to discover something, then they get a budget and they go to an independent research that studies this independently and get analysis objectively. If you go to the fox to decide, how to fix the hen house, the fox is not going to be your best ally. The fox wants the hen, doesn't want to protect the hen house. That's the problem. And so people don't understand the system, and now everybody's gaming in a system that's breaking down because we've let it go bad, especially in the last 15 years since 2008. We've just thrown free market capitalism out the window. We've been doing it in a little ways before that, and this special interest has been growing longer than that. They shouldn't be special interests paid with huge budgets to lobby for something in their tiny little interest and often against the interests of the rest of the public. That just shouldn't be allowed. The everyday public can't do that, okay? And that's the political side. There's things we need to fix the free market business side. We need to fix a lot of things on the political side. And you got to look at things and term limits and stuff. Are term limits really good? Just when somebody gets in and gets enough knowledge and connections to make things happen for the people, you kick them out? It'd be better to figure out how to weed out the people that are abusing power than to kick out a bunch of good people just because they were in there for 4 years or 6 years or something. So it takes a constant effort. It's the hardest thing is to create a new system. That was the late 1700s. Free market capitalism met democracy, and they're the perfect marriage, just like man and wife. I'm just telling you. It's just an unbelievable explosion. Well, we still have to work to keep that system honest because everybody will have an incentive to cheat, and that's what you have to police. Again, it's not to restrict business innovation, it's to restrict people cheating, and that should be the only purpose for regulation. There's costs that people may cause, like pollution that comes from oil refining, let's say, okay? If the people selling that oil, well, they should pay for the cleanup of that and not the downline product or government agency stuff that have to tax people. They should have to pay for that. That should be figured into the price of the oil or petroleum or gasoline products they're selling to consumers. And then the system is still free market and honest and taking account something that normally wouldn't be taken account in free market systems because you had to build it in. Because you can't analyze that and say, okay, what are the downline costs of dealing with this waste that comes out. Let's allocate that cost back to the right people, and then free market capitalism will put the cost in the right place, and people will make right decisions again, and the bottoms-up system will work. The other thing that people don't realize is this monetary policy they use to control everything. This happens on lags. So the raising of rates into July of 2023 is not going to hit fully until the first quarter of next year. Now, I'm looking at saying, my gosh, it's hit some, but I would have thought it would have hit more by now, especially housing that are so sensitive to these, mortgage rates that have gone from 3 to 4 to 7 to 8. That's huge. But you got to remember, once a person decides to buy a house and gets on it and starts the process, most people are going to finish it. It's in process. I think you're going to suddenly see what I call the exhaustion of demand. Things like cars and autos, after all this stuff follows through, the bubble just carrying forward, gets to a point where people realize, okay, well, I finally did buy the damn thing, and I probably bought at the top of the market, but hey, I'm not doing anything now. I think you could just see demand fall off sharply, and economists will be running around saying they won't be able to figure it out. It's because they overstimulated, they borrowed from the future to overstimulate demand today, to make the economy better today for people and the politicians, and you exhausted the demand, you stole it from the future. Anybody that would have thought of buying a house in the future already bought one at the lowest mortgage rates and the lowest down payments in history. So who's going to buy them in the future? Anybody in any position, small company to president of the United States, has to understand, where are you in a cycle? What is real and what's not? When you're stealing from the future, it's going to kick you in the future when there's no demand because you stole it. And the problem is, if people knew they were stealing it, then they might save up and anticipate that, but they don't. They just think the economy's going better than they think. And then one day they're in a Great Depression and they're like, what happened? They're blaming politicians and blaming everybody. And the point is, we just stole from the future and nobody told anybody that's what we were doing. People think it's natural progress. We stolen more from the future than any time in history. I am hoping to live long enough, and I think it'll just be 3 to 5 years, to see what the consequences, because this has never been done. We never had the power to print money like this. Federal Reserve wasn't even created until 1914. Didn't even think of doing something like this until recent decades, okay? So never before have central banks taken over and said, oh, we can just grow it by magic. We can just get what we want. I mean, it's like credit cards. I can buy now and pay for it, well, whenever I want to. Oh, 24% interest? I'll worry about that later, okay? But that's what happens. I mean, debt allows people to borrow from the future. China has built enough homes for all the rest of the people in future decades. They're going to move from rural to urban areas until they mature at 80% urban, and they're at 65 now. And they're never going to have to build a home again. When they come out of this great downturn where home prices are going to collapse, everyday people are going to lose all their net worth and be probably revolting against the government in the streets. When they come out of this, how are they going to grow? They already built enough infrastructure, roads, office building, and housing for the next couple decades. How do you grow? That's the major investments in growth industries to grow, because you borrowed from the future and you didn't tell anybody that's what you were doing. China is dead. China will never be the same, and I really feel sorry for those people over there because they got something they didn't deserve, but they don't know, and they're going to be in shock when, after seeing the biggest rise of an emerging country in history, both in scale and growth and standard of living. I mean, they've gone from 2,000 GDP per capita to 25,000 or something like that in relative terms in decades. Nobody's ever done that fast. It took us 160 years to make that sort of progress, okay, in the U.S. So they're going to be in shock when they realize, oh, the reason we moved so fast, it was borrowed from the future. Now you're in the future and there's nothing. You'll never get a job building a house, and your house is going to go down to what it's really worth when we realize that we really do have 22% of the houses empty in this country. Well, if we had 22% of houses empty in the United States, you don't think real estate prices would collapse 50, 60% in a heartbeat when there's that much excess supply that you can pick up for free, walk down the street, and pick it up out of foreclosure for, 2 cents on the dollar because it's been sitting empty for years or decades? So this is just people not realizing consequences, lack of leadership. Politics rewards people for doing well now, worry about later. So politicians are naturally incentivized to make today better and worry about the debt and the consequences and the overbuilding or whatever they did, or greasing the palms of corrupt industries. All these things are going to catch you in the end. And when it comes, nobody will even know why it happens. And by then, it doesn't matter. It already happened. Even if you can figure out who did and why, they're going to be dead or in jail already. This housing collapse has to happen. The same house in Ohio that was, $100,000 200 years, and maybe within normal inflation might be 200 now, okay? It's $450,000. You're paying, way overpaying for the biggest house in your life. Of course that house is going to have to come back to something like 250,000. And then not only do you lose the net worth you had in it, you're probably underwater in your mortgage. And then maybe if you're lucky, the bank may forgive some of that, but then the bank may go under forgiving. This ripples throughout the whole system. And that's how you have a depression. So, and the depression will cause people to lose their jobs beyond what happens with their housing going down. So this stuff's inevitable to happen. So you have to understand what's normal growth in the economy. You can't know that if you don't know what it should be. I have the type of simple tools that will tell you how well we should have done, and we should have had a long downturn after 2008. And the fact that we didn't means we had to cheat to do it, okay? Well, cheating and printing all this money, which is very obvious, and running all these deficits, the deficits by 1 or 2 to 1, they printed about $8 to $9 trillion of money, but 19 trillion went into nonstop deficits, way higher than history. We haven't had a balanced budget since 2001 or something like that, okay? There's a cost to this. Just like if you keep borrowing when you're young, when you get older, you're going to have to pay off that debt, and you could be bankrupt because you kept spending more than you're earning and it finally caught up with you. Everybody knows that. It's a natural tendency to do it and hope, well, things will get better in the future and I'll worry about it later. Well, I can tell you when you're going to have to worry about it. It's when the economy goes down. You're not going to have to worry about your house going down until this housing bubble collapses. My best forecast, you're going to see that happen over the next 2 to 4 years. And if it doesn't happen by then, I'm going to quit my profession because they finally did create a permanent plateau of prosperity. That's what they said at the top of the Roaring '20s. The leading economist said, we've entered a permanent plateau of prosperity. Yeah, it's exactly when they had the greatest crash in all of history. You don't get a permanent plateau. If you do, something's wrong. And that's what we're at right now. We've extended a boom so far past its normal limits and when it should happen. We're going to have to pay for this. There's going to have to come, this stuff's going to have to rebalance. There's no way, if I was the government, I would not do anything to stop the meltdown. I would just tell the mortgage companies and the banks, to the degree you write down mortgages voluntarily in this crack to make it so your people don't have to default and can afford to pay the new loan, we will take some piece of that. It might be 20% of your loss. If the government's going to stimulate, don't throw money in the economy and get people to do the same thing and keep the bubble going. Get less money to help cushion the cost of fixing the system to the people who have to bear it. And it's going to be the lenders. It's going to be the investors, but particularly the lenders, the mortgage companies, and the banks that funded the biggest housing bubble and globally in all of history. Help cushion them, give them an incentive to make these changes, and let them know if they don't do it, they're going to go bankrupt and you're not going to help them at all. Either cooperate with us and work with the system and let the system flush this stuff out. Don't fight it. And if you do, we'll help you some, because we can't take it all, because then the government will be bankrupt. If you don't, we'll just let the system go down and all of you banks will be bankrupt. There aren't many banks that are going to be able to deal with this sort of losses because it's not considered possible. Well, before the last crash happened from 2006 to 12, houses it was a clear bubble. They can't even compare it to a bubble in history, the biggest bubble in history, not only in 5 years. Well, prices went down on average 34%. Now in the stock market, that's nothing. In housing, which mortgage, 70, 80, 90% often, that's huge. That's underwater for many people. 2008-9 was the worst downturn we've seen since the Great Depression, and the only one that was close to the early 80s one. I tell people, if you want to picture what this downturn is going to be like when it happens, think 2008-9, multiply it by 1.5 times. It'll be 50% worse. If there was 11% unemployment then, it'll be 16% now. If the stock market crashed 57% then, it'll be 86% now. And that's what I'm forecasting. And that's what happened in 29 to 32 when finally a major bubble, and back then that was the biggest bubble in history. This one makes that look like child's play, okay? Because it's so much broader and so much longer. But that's what happened back then, and that was just what it took to balance the markets back, and it caused 25% employment at worst. Greatest depression and greatest stock crash in history, just from a bubble bursting. There was no big deal happened except that stock prices started to go down, and then they were so overpriced, it built on itself, and then nobody could stop it when it happened. And then, boy, it's in 3 years plus that. Actually, that's what I like. If you eat some really bad sushi, let's just say something that simple, what does your body do? It's got poison in it. It flushes it out as quick as possible. Doesn't care where you are. You just better hope there's a bathroom close, okay? Doesn't care. The system says, my job is to get this. It's not to do it out so it's not too painful and do it out over the next 3 days. Get it out in the next 20 minutes. That's the proper way to do it. The Great Depression in 3 years erased a giant long-term bubble and got us back to health so we could grow again. And we've grown ever since. Never saw those unemployment again. Never saw those lows in the stock market again. On and on. Never saw house prices or anything there again ever since. That's how we make progress. We grow, but we have to clean out the waste, mistakes, the toxins, whatever you want to call them. All we needed to do was go one more year and a half into mid to late 2010 instead of early to mid 2009, turning around that time. We just gone another year and a half. The system would have had a proper flush. Doesn't mean we would never have any, but we would have gotten most of this debt imbalances out of the way and would have been a healthier economy and not have to print $27 trillion to keep a dead body going in the emergency room. We basically have a dead economy in the emergency room living on life support.